Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Do me a favor, hit the like button, hit the subscribe button, ring that bell, because we don't have a lot of time. We got some breaking news to get into. First of all, congratulations to Elon Musk on the new babies. You know, it looks like Elon Musk single-handedly is essentially saving the world from a depopulation event. So everybody do your part. Make sure that you're, creating enough kids to replace you and your spouse, whoever that may be. All right, we need to at least make sure we can maintain the bare minimum. And Elon is doing more than all of us right now, as we know with the new twins. And on that note, normally Elon Musk never pulls out, as we can tell with all the kids he has, but turns out he's pulling out of Twitter. Let's take a look. Here we can see on CNBC, Elon Musk notifies Twitter he is terminating the deal with Twitter. So let's read this. Billionaire Elon Musk wants to end his deal to buy Twitter, according to a letter sent by a lawyer on his behalf to the company's chief legal officer on Friday. Keep in mind, this is when all of the media moguls were meeting out in California. So Twitter CEO was there, Elon was there, all right, all of the big guys in LA, Hollywood and all that, they were all there. And so this is coming essentially pretty much in the midst of that whole event happening, or maybe after Elon finished. I don't know all the details. Maybe they'll say it here in this article. I haven't read it yet. But the point is, Parag, the CEO of Twitter, Elon, they were all at the same event, the same conference, the same whatever you want to call that event, the meeting of the minds of the media elites. They were all there together as this comes out. So let's continue reading here. Twitter shares were down about 5% after hours on Friday. You would expect that. In the letter disclosed in a Securities and Exchange Commission filing, Skadden Arp's attorney, I think that's how you say that, Mike Ringler, charged that, quote, Twitter has not complied with its contractual obligations, end quote. Ringler claimed that Twitter did not provide Musk with relevant business information as requested, as Ringler said the contract would require. Musk has previously said he wanted to access Twitter's claims that about 5% of its monetizable daily active users are spam accounts. Quote, Twitter has failed or refused to provide this information, Ringler claimed. Sometimes Twitter has ignored Mr. Musk's requests. Sometimes it has rejected them for reasons that appear to be unjustified. And sometimes it has claimed to comply while giving Mr. Musk incomplete or unusable information, end quote. Ringler also charged that the letter that Twitter charged in the letter that Twitter breached the merger agreement because it allegedly contains, quote, materially inaccurate representations, end quote. This accusation is based on Musk's own preliminary review of spam accounts on Twitter's platform. Twitter has said it's not possible to calculate spam accounts from a solely public information and that a team of experts conduct a review to reach the 5% figure. Quote, while this analysis remains ongoing, all indications suggest that several of Twitter's publicly disclosures regarding the, MDAUs, so the daily active users, are either falsely or materially misleading, end quote, Ringler alleged. He also claimed Twitter breached its obligation under the agreement to get Musk's consent before changing its ordinary course of business, pointing to recent layoffs at the company. Twitter did not immediately respond for comment. Okay, so a lot going on there, a lot to talk about. Now, first of all, in my opinion, this has been the one thing that Elon has kind of held on to, and something that kind of you see everywhere. Like I saw on CNBC all day this was being talked about, right? There's nothing else really for them to talk about. The jobs numbers that came out, it was higher than expected, but if you dug into the jobs numbers, you realize we're about 70,000, 74,000 higher, so hotter, so that's why the market starts to sell off. But then as you dug through the numbers, what you realized was that there was also a revision of negative about 74,000 over the last 2 months. So really it's a wash. So that's when we start to see the market actually rally after they kind of woke up and understood what's going on. So that was nothing to talk about. So what else were they going to talk about? Well, you always chalk it back up to Elon Musk. Elon Musk is always a go-to topic for views and clicks. And so all they were talking about is how there's no way Elon can get out of this whole Twitter deal because he's contractually obligated. He signed a contract. He said $54.20, whatever it was. That was his number. He's the one that said, this is my best and final. And so now for Elon to come back and try to have these stipulations about this, that, or the other, you can't do that. We won't hold up in the court of law, which would be Delaware. So anyways, my point in saying this is I think they've been wrong the whole time because this is the big linchpin. Twitter claims that they have 5% bots, if you will, right? About 5% is the most that they have for bots, and they're constantly cleaning up and removing bot accounts. Elon was saying, okay, I want proof that you have 5%. And then Twitter goes on to say, okay, well, we don't have a way for you to publicly to see the proof of how we get to this 5% number. So then time goes by, we don't hear anything. And what do? Well, they do a brain dump. They do a data dump on Elon saying, here's everything. You figure it out. All right, so here's the problem. With Twitter, and it's on Twitter, really. This is probably, if Twitter sues Elon to buy them, they might be shooting themselves in the foot. Hear me out. If Twitter is going to sit there and on actual financial documents say that they only have 5% bots, there's got to be a way they come up to that number. There's got to be a quantifiable way they reach that. They can't just be a number they pick out of the air or a guesstimation. That doesn't fly, okay? Because you say 5%, well, that's what you're saying. Of course, you're going to go under. Maybe it's 15, maybe it's 10, maybe it's 7. Who knows? But you have to be able to tell individual investors the truth here. So here's the problem. If Twitter is sitting there saying, okay, you can't figure it out publicly, it takes too much, there's other data and information you don't know about. If they're saying that about publicly, and then they do a data dump to Elon, and even then they still can't tell, Elon can't tell, and Twitter can't explain how they get to their 5% number, well, then they got a problem. Because then it almost looks like they've been lying on all their financial statements when they say they only have 5% bots. So this will put Twitter into a bit of a pickle. Do you fight Elon so that you get him to buy? Well, what happens? What gets uncovered along that way? Does what becomes uncovered is the fact that you guys have been lying or committing fraud in some way because you're just picking a number of 5% because that sounds nice? If you have no real quantifiable way of getting to that, then how can you even say that? Why would investors trust that? Right? I mean, this goes all, I mean, it's not the same thing, but it has the same air as the financial crisis, where you had these credit default swaps that were rated with AAA or good, and it's just a repackaging of a whole bunch of BS, and they're just saying this is what it is, but nobody really knows what these credit swaps are made up of. That's what this feels like. Not to the extent, of course, but it's what it feels like, and from a company perspective, if you go to court with this, you're going to look very bad. Anyways, this is big news. We'll obviously be talking about this nonstop next week. I guarantee you every single day, it's all you're going to hear on CNBC, MSNBC, Fox, CNN, Bloomberg, Yahoo. They're all going to be talking about this because they don't have anything else to talk about. Let's be honest. Everything else is dead for them. The only thing they want to talk about is Elon Musk and Tesla because they know it gets clicks. So with that said, I'm going to dive into Tesla and the stock price and look at the charts. Okay, so here we are on a daily chart of Tesla. You can see I've got a lot of stuff going on here. This should be about a 1 year range. So let's just make sure 1 year. Okay, here we go. Yep, 1 year. All right, so as you all know, Tesla has been on this downtrend, right? So you can see this red line here. Let me zoom in a little bit here for you guys. Okay. Hopefully you can see that a little bit better. But so here we can see this red line. This has been the downtrend that we've been on nonstop, all right? And so I also have this other blue line where you can see where we've attempted to break out of those points from this red line, right? See here, we failed, and now we broke out, and then we failed again. So that's what this blue trend line is. Now, here we can see that not only have we, not had to test this red line, but we also broke out of this blue downward pressure, this resistance, this downtrend. So that's very bullish. If you want to add to the bullishness, look at this. Let me just zoom in here. Actually, let me hide some of these lines here. I'll just go ahead and remove some of these. That way, this looks a little clearer for you. Okay, here, remove all of this. Okay. There we go. All right, so look at this wedge that we've been creating, right? So you can see we're getting higher lows and we're getting lower highs. And so this is essentially creating this inflection point where everything's going to squeeze. And we might be hitting that squeeze right now. Look at this. Today was the first time that we broke out of this wedge here. So we broke out of it. So I guess the number was probably at right about 7:30 we had a break, maybe 7:32. Instead, we closed at 7:52 today. Why else is that significant? Well, it's also significant because we've been kind of fighting this resistance right here at about 750. You can see that we try to break out and then we fell right back down. Then we try to break out again. We hit literally right at 750, came back down. Today, you can see again that 750, that's a very important, crucial number. 750 is kind of holding us back right now. Now, if you look a little bit further, we can see right here, this is where we broke out of that 750 slightly. This is 798. So 750, 798, these are 2 roadblocks right now from actually having a meaningful move higher. So if I can zoom out of here, if we can pass 750, if we can pass 798 and get back into the 800s, I really feel like we're going to go ahead and start having a meaningful run. Now, with this whole Twitter news, we are actually up in after hours. Let me just take a look here real quick. So I can give you accurate information that's live. So right now we're up $15.71 in aftermarket, $700.68 or 700. That's $768. So that puts us right about right here. Right, so we're right about here. So essentially, past today's highs. Right, today we hit I think a high of like 764. So that's pretty bullish. If we can ride this, into Monday or to next week and reach that 800, break out that 798, we might be able to go ahead and start having meaningful way higher. Now, there are some headwinds that we can't ignore. CPI. CPI is going to come out. If CPI is hotter than expected, well, you can damn well guarantee we're probably going to move lower. So be prepared for that potential move lower. Now, with CPI, it seems almost overwhelmingly the consensus on media, on analysts coming on, people on Twitter, it really seems like people think that we might have peaked last month when it comes to inflation. So if that's the case, I think we continue on this bull run, right? I mean, look at this. I think we continue on this. I think next week will be kind of choppy trading. We'll see Monday probably be positive for Tesla just because of this Twitter news. We go into Tuesday, we go into Wednesday, and then I think Thursday is when the numbers come out for CPI, again, the inflation reading. And if that is taken down at all, I think the market sees it as bullish, sees it as potential the Fed slowing down their rate hikes, and then we can rally even more. Now, what's the other headwind Tesla still has? Well, you could say that the Fed hiking rates in July, but I think that's essentially baked in. They're going to do a 75 basis point. Even if CPI comes in a little bit lower, I still think the Fed sticks with this 75 basis point, more so just as a precautionary measure. Now, after July, I think the Fed's going to chill out. I think they're going to maybe drop down a 50 basis point, 25 basis point until they get to their 3% target, right? So I think that's what will play out if CPI shows to be coming down. And it can't just be like staying at the same level or even a 0.1 down. It needs to be like 0.2 or more, I think, for them to actually start, okay, where are we at? Look at the economy. Oh, GDP was just negative for a second quarter, right? These are all things that the Fed has to look at and take account of. Even though everybody's sitting there trying to say, oh, 2 negative GDPs, that doesn't really mean that we are in a recession. It's a technical recession, but look at the job market. Everybody wants jobs. As far as I'm concerned, that whole figure at this point is just wrong. All right, who cares if you have all these job openings? Like everybody sits there and looks at it and says, oh, well, we have 10 million job openings. Great. And we have 5 million people who are unemployed. We got 2 job openings for every 1 unemployed person. That means nothing. You're essentially at zero. You're at zero. Why? Because these people who want these jobs, they can't do those jobs. And the people who are hiring don't want the people because they're not qualified. So what are you going to do? You have a bunch of people who are unqualified to do the given job openings that are available, and there's a disconnect here. Okay? Like if I'm an engineer and there's 10 job openings for a doctor, I don't care how bad I need to work, I'm never going to be able to get that job opening. It's not a fit. Therefore, as far as I'm concerned, there are 0 job openings because they're all doctor openings. All right. Hopefully that makes sense. But I think that's where we are at this market. All right. Like this is where we are fundamentally. Right. We need more STEM employees. And those are what the jobs are. We don't have a lot of job openings for other positions. Now, sure, you do have job openings for like working at Chipotle, at CVS, at Walgreens, right? These are other type of positions. But the problem there is people can go get higher paying jobs working elsewhere than do those jobs. So why would they do that? Right? There's a problem here with these lower paying, lower value type jobs. No, don't get me wrong. I love my Chipotle. And I love the people who work at my Chipotle. They are my heroes, because when I'm hungry and I don't feel like cooking and my fiance doesn't feel like cooking and she looks at me and says, "Hey, can you cook tonight?" I say, "Yes, Chipotle." Now, I love to cook, but I also love Chipotle. Anyways, what I'm getting at is we have a disconnect here. You got a lot of openings for jobs that really belong to people who are maybe in college trying to work through it, or in high school. And then we have a lot of openings for people who need to have engineering degrees or STEM backgrounds. And we have a disconnect here. It's the problem. Anyways, so I think the Fed will try to paint that narrative. We'll probably see CPI come down. We'll probably see the Fed start to, chill out with the rate hikes, not be so aggressive. You'll see the stock market come up. And then the second real headwind for Tesla, right? Because I don't consider the Fed stuff a headwind, just CPI. CPI is a headwind. And then the second is Q2 earnings. July 20th. If we can get past July 20th, I think we can finally breathe a sigh of relief, okay? July 20th is earnings for Tesla. And if we can get gross margins no lower than 26%, right? If we can see that Tesla is still a juggernaut when it comes to efficiency and profit, if we can see an uptick, maybe they report FSD beta 250,000 users, that would be monumental. If they can talk about Tesla insurance and how they've expanded to all these new places, this is another business entity that people just don't realize exists within Tesla. All right, that's huge. So if Tesla can paint a good story, and then on top of that, they sit there and they say June was a record production month for Tesla. Record in Shanghai, record in Fremont, obviously record in Austin and Berlin. And we're going to go into Q3 going aggressive. I almost cussed there. Going crazy. Bad something crazy, if you can fill it in there. That's going to be very bullish. The only thing that they really should probably explain is the shutdowns. And there's plenty of articles out there, but they should explain it anyways on the earnings. Shanghai shut down for 4 days to 2 weeks. Why? Because they're increasing their production ability, right? So they'll go from about 70,000 to 80 to 90,000, rumor has it. Berlin shut down for 2 weeks. Why? Because they're doing the same thing, right? They're retooling. And this is very normal for any quarter, for any manufacturer. So I think for Tesla, it's going to be very bullish. They will blow it out Q3. They will blow it out. And they need to give that confidence to Wall Street. At least Zach does. Let Elon be Elon. But Zach needs to instill confidence in Wall Street. My final thing I want to talk about is don't be surprised if we see more lockdowns, zero COVID in Shanghai. Don't let this blindside you. There's upticks in COVID now in Shanghai. Granted, it doesn't look like they're shutting everything down right now. No hysteria. But I do think that if that does happen, Tesla will be better prepared. I think all these companies will be better prepared to go into a closed loop system. And if that's the case, well, we'll deal with that when we get to that. We can't worry about things that we can't predict or we can't control. Right now, what we can, control is what we're doing on a day-to-day basis. All right, so keep doing what you're doing. Keep up the faith. We're going to get past all this, right? This will end. We will see all-time highs again. And at the end of the day, you're going to be able to look back and say, well, I made it through that 2022 first half, and you'll be better for it. And hopefully you'll have had a chance to dollar cost average. And hopefully you'll be at a place where you can feel even more confident about your financial situation than you've ever been, even if you took a little bit of pain. Why? Because you learned, you figured out how you can get frugal, you tightened up, you trimmed fat where you needed to, whether it's on your daily spending, whether it's on your investments, whether it's just on eating out less rather than cooking, right? I just mentioned Chipotle. I'm guilty of it. But we've all seemed to have trimmed down on our spending and become more efficient. And I think we're all going to be better for it to get to this new leg with Tesla, which, again, 2030, let's go, $10,000 a share. All right, I could go on forever. Listen, I hope you guys enjoy your weekend. I'm going to be putting out maybe some interesting content on Sunday. Stay tuned for that. Depends on how fast I can edit, but I'm very excited to share that with you guys. Just a quick hint, a little tease. It involves a Tesla Model Y, so we will see what I come up with. All right, we're going to leave it there. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Enjoy your weekend. Peace.